What's going on, everybody? It's Monday, September 26, 2022. It's episode, I believe, 17 of the Daily Logs. And today I'm going to cover US 500, the trades that I took, or the trade that I took. You can see here on the screen, this is the trade that I took. I posted on Twitter, so you can go over there. The link will be in the bio. You can check out the actual chart. I'll go over it today as well, but if you want to use that for a study journal. But you can see here, I went short, and I was talking about, I believe, Saturday. We were looking to target the previous week low, which is 36.37. If you look at the actual, I'm sorry, this was the actual previous week low. This is the weekly low from, I'm going to go ahead and delete this. This is all the way back from June, but that's what I was overall targeting, right? So if you look at, there's actually a lot of things today. It was such a beautiful trade, and that's something that you should definitely put away in your study journals and in your logs, because these type of trades, and I don't know why on Mondays, usually Mondays are not typically the best, but for the past few weeks, I've had basically the best trades on a Monday. I think for the last 3 weeks, Monday has been the best day out of the entire week, and I've been very satisfied, very happy with that. The only problem for me is either I'm like satisfied and either I'm done for the week, or I want to push it and continue that. So it's something I kind of wrestle with, but I'm quite content with the trade this morning. I'll probably wait and see what plays out throughout the rest of the week. But going into today, there's so many different confluences. This is an A+ trade, guys. This is something that straight out of the YouTube model. It's simple, it's easy, it's everything you would ever want in a model. It's something that it happens over and over again. May not happen every day, but at least happens at least once a week. So let's dive into it. Going into New York session, the opening of New York, I was looking at this 4-hour fair value gap. I'm not sure if I mentioned it, but it was something that I was eyeing. I was looking at these two fair value gaps. So institutional order flow is bearish. What's the narrative overall? Bearish. We're looking for the previous week low to be ran out, and then this weekly low to be ran out all the way from a weekly time frame. I posted on my community tab yesterday. I was looking for this, and then eventually these lower prices once we reach down into it. But pay attention to this. What's price doing on a higher time frame, weekly time frame? We're respecting bearish PD arrays. We ran out buy stops, ran into a fair value gap, displaced lower, reacted very nicely off of that fair value gap we annotated last 2 weeks. Last week we reacted off of this order block here. So all good things, all good things aligning for a bearish narrative. Going into the week, we opened down, which is nice to see. We came back up, filled in that. So now we have a small volume imbalance. Watch that tomorrow. We do now have a bearish fair value gap here. I'd rather see that stay open and us trade lower, but if we trade back up into that tomorrow, even just up into that high, watch that area. Something to note. So looking at the 4-hour, I may separate this just so we can all look at it. So you can see here, even I was paying attention to this. So I usually split my screens because I have TradingView Pro or whatever the package is. And then if you saw my setup, I have on my left-hand side, I'll go down to, let me first annotate this. So this is a beautiful example of a reclaimed fair value gap. So this fair value gap here, you guys remember this from last week? I believe this is the day that I lost. I was eyeing this. The reason I was eyeing it, reason being, it is layered. So you have a parent PD array, which means the 4-hour fair value gap is the parent, and then you have the 1-hour fair value gap. And then if you dive down into the 15-minute, I think I talked about this fair value gap here, right? This is something I actually was trying to go short off of on Friday. I was looking for price to run back into that. But when price leaves those type of areas open, it's something I definitely look at. So coming into the New York session, there was actually a couple long opportunities, but I didn't really care. All I cared about was going short. I didn't care about going long. So going into New York session, so these are my opening prices. So I was looking at it. This is midnight, and then this is the 7:30, which would be maybe 8:30 if you guys are following ICT's time. So we were pushing up above. So I was looking to set the high of the day. And then there's buy stops resting here. So we had the buy side liquidity resting here. And this is what I was waiting for. I'm not rushing to get into a long. I don't really care too much. There was actually a couple opportunities. I will mention that. If you look at this entire thing, it's actually a market maker sell model. Original consolidation, accumulation, reaccumulation, smart money reversal, first stage of distribution, second, and then we finally get underneath the sell side liquidity. But you don't need to know that, okay? You just need to understand what's the narrative, where are we going, what do we need to take out first, what do I need to see second, displacement. I'll touch on SMT as well. So we ran above the buy stops, which is amazing to see. That's what we want to first see out of our model. And then we see the, let me take these off for a second. We see the 15-minute fair value gap. I watched price trade into that. I didn't want to see it close above it. So it was a really good sign as soon as I saw this first down close candle. And if you look at my community tab, I'm just trying to give you a picture of what I was going through this morning, what I was paying attention to. So I was looking at the 15-minute. This is exactly how my chart was set up. And then to my left, my other monitor, I was shuffling through just back and forth, back and forth, back and forth, 5 through the 1. So 5, 4, 3, 2, 1. I'm shuffling through them, and I'm waiting for a nice displacement, and I'm waiting for a nice market structure shift and a fair value gap that's inside of a premium. So I'm waiting for all those confirmations to set my limit and then go short. So if you look here, there's nothing on the 5-minute. Okay. We get some nice displacement. I'm looking at a 4-minute, nothing there. 3-minute, let me actually go ahead and open this up. 3-minute, there's a bearish order block here. 2-minute, no fair value gap. 1 minute, now this is what I was paying attention to, and you can see I have all my annotations still on. So we have the 15-minute fair value gap, you have the 1-hour reclaim fair value gap, and then you have the 4-hour fair value gaps. All those things aligning is really good to see. And then the SMT is also another beautiful thing to see, which confirms your trade. So if we go ahead and look at, let me go down to US 100. So US 100 was actually making the higher high as well with US 500. But if you looked at US 30, US 30 was failing to make that higher high, and it still hasn't. So this high here was a high on US 500, right? So right here on US 30, we failed to get above that. US 100, this is US 100, was also making that higher high. So that's a bearish SMT divergence. That's tipping its hand to us that there's a crack in the correlation. So it really confirms to us that this thing could really go bearish. And we are now on a higher time frame perspective, we are bearish. So I saw this nice displacement. Even throughout here, I was just shuffling. I saw this fair value gap here, but I wasn't sold just yet. The reason being, there's plenty of times where there's a nice displacement with this YouTube model. There's a nice displacement like this, and it could be bullish. And you'll get caught up like this, but that's knowing the underlying narrative. To me, it just wasn't that nice of a displacement. There wasn't really a, nice displacement on a 2-minute, 3-minute, 4-minute. So waited for this. And then the next part is waiting for that premium. Because let's say the fair value gap was resting beneath the 50%, so equilibrium. That does not qualify a trade for me. That's what rules and your psychology will do for you. Because if you start chasing things and you start trying to get in and FOMOing, you're going to get yourself hurt. I've done it so many times. Please just follow your rules. These rules are super simple. Buy stops ran. Trade into a higher time frame PD array. Bearish. SMT bearish. Displacement. Beautiful. Market structure shift. Return to the fair value gap that's in a premium. You go short. There's no thinking. There's no emotional involvement here. You set your limit. So I had my limit at 25%. I was okay with the risk. I don't need to try to pick the very 50% of this. I was looking at just the 25%. That's okay with me. My stops are right above this high here. I was risking about 7 points. And then I was targeting, so I took a couple partials beneath these relative equal lows here. I had the sell side liquidity here, And then ultimately I took my final partial underneath these relative equal lows here. So all the sell side resting underneath here was the final target for me, which I believe ran somewhere, yeah, somewhere around 44 points, which was beautiful to see. There's a few more opportunities you could have went short. There was a fair value gap here on the 1 minute. Swing high, so the dealing range high, dealing range low. Above equilibrium in a premium. Expect price to trade into the second fair value gap. It does very nicely here. We displace again. We have another fair value gap here. This is another example of a reclaimed fair value gap with buy side liquidity being ran on a 1 minute. So if you do from dealing range high here down to dealing range low inside of a premium, price dips into that. Beautiful to see. Price runs lower, comes up, runs the buy side liquidity resting above here. The bodies stay beautifully respecting the 1 minute fair value gap here. The wicks come just above it. I believe there's a couple nice setups on the 5 minute, which is what you really want to see. So on the 5 minute, there was this here. You could use bodies, but I'm going to use the wick here. So fair value gap here. Let's say we use the bodies. If you're going to wonder if to use bodies or wicks, most of the time I'm using wicks, especially on a lower time frame. To me, that just comes with experience using the fib. But we dip into that premium fair value gap. You can go short, take out the sell stops resting beneath here. So that's really nice to see. Once you reach underneath these sell stops, I just really wouldn't want to go short personally. You can see price start chopping around a bunch. And let me see here if there's anything else. Nothing too major on the 1 hour or 30 minute, 1 hour. Nothing to note. But overall, today was very cool to see. You can go over to my Twitter. I've talked about how all these are live trades. There's some people that, are messaging me saying, demo trader, paper trading, etc., whatever. I just want to inspire people because after a long time of doing this, years and years of hard work, a lot of losses, a lot of lessons. It's possible, guys. This is very, very real, and you can really get to a level of precision. Like it really, sometimes I take this for granted, but like, I don't think you guys really understand, like, what we're doing here, what ICT's taught us is something so unbelievable. Like, we're trading on a 1 minute time frame, S&P 500. People on Wall Street that have been trading for 40, 50, 60, 70, how many years are not even getting to this level of precision. They're not getting to this level of understanding of this market. So it astonishes me. I'm filled with gratitude every time I see it because it's just such a wonderful feeling knowing that I'm being led in the right direction. Regardless if you're losing and you're not understanding it and you feel like you'll never get it, trust me, you're going to get it. I've been there before. I still have my own personal struggles and stuff like that. But trust me, guys, you can do it. I did it. I'm no different than you. Just put in the time, the hard work, the effort, no matter how long it takes. Everybody's time when they get it is different. And it's not like profitability comes overnight. You know, you'll go from a losing trader to a break-even trader to then having those small consistent wins to those big consistent wins. And then from there, basically your career is set. As long as you continue to maintain that same system, that same mentality over, however long you want your career to be, you're always going to be at least profitable. So I think that's going to be it for me tonight. Let me touch over a few things here. Going into tomorrow, I would like to just see this thing roll over. I would prefer it to have this high set in place, meaning I would prefer price not to run above that high. This is another thing I forgot to mention. It's called the three drive pattern. ICT's talked about plenty of times. I'm sure you can find it somewhere on the YouTube model. But three drives, it's like three Indian heads. It's actually not even ICT's concept. It's actually from some book that he's learned, but you can see it perfectly. First drive, second drive, and then we finally have that third drive above the buy side liquidity, and the price just rallies lower underneath the sell stops. So going into tomorrow, we're trading into this fair value gap as of now. Like I said, it would be beautiful if we don't take out the sell side liquidity before the opening tomorrow. That way we can, maybe try to go short here. Doesn't mean, I've been caught up a few times, right when sell side's right there and you keep trying to push it, keep trying to push it. Example here, you're trying to go short, you're trying to push it, and price just trades back in and basically pisses you off. So be careful. There is, like I said, the volume imbalance resting here. So watch that on your daily chart. Watch this area right here. Watch her price to basically be like a paint roller, roll right over it. I mean, if we get really aggressive, we could come up into here. We do have some news tomorrow, so definitely wait until the news takes place, or if news hits right when your model forms, go ahead and obviously execute at your own will. But until tomorrow, guys, good luck and good trading.